starting now. So as people are coming in, let's see. Ding, 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 ding. All right, good evening, good morning, good afternoon, good night to different people from different parts of the world. Today will be Lloyd, that's me, and Alexis. So we'll be conducting both the fundamental and technical, and possibly we might be chatting a bit about Go. Look, I really hope you had a good run on Go. Uh, Before I dive into the analysis. Yeah, so I was just telling Alexis that I had a good run just this week. That I had a good run of 1 to 6. So I threw my stop loss. It went all the way to the high of 1 to 8, and then it hit my stop loss at 1 to 6. Yeah, I was really hoping that it might go up to way to 1 to 10. Now, personally, this time around, I just trust the news. A lot of analysts have been saying that Go will go to 4,005. So I'm really hoping that I can put in another position in Monday or Tuesday. Yeah. Any of you had a good run on Go, which is uh more than 1 to 10? Okay, I'll be a bit probably more realistic, at least a 1 to 3. Lexis, do you have anything that's or several in your case, several position that might be near to that?
I think you asked me that question because you probably know how I trade lah. Very hard for me to do 1 to 3, but I have yes several positions of 1:1, 1:1, 1:1, 1:2. Yeah, it's just my nature. I get up before you turn, so it's the
Precisely,
personality.
precisely is the way we trade differently. I might have one trade of 1 to 6. You might have 10 trade of 1 to 1.
I've been yeah,
Yeah.
it's almost it's a very I think it's very easy if you trade with your personality, I think, because then it takes all the worrying, when the thing retraces, it takes all the anxiousness out of trading. Yeah. I think that's a really interesting thing about trading, the way you trade. That takes the frustration out of it.
KW in demo mode 20 times RR, real life 5 times. So that means your real life compared to your mental expectation of yourself is only, can I say, you only live up to 25% of your own expectation.
This this kind of thing only like that to say, okay?
Hey, that's our trading psychology. That means you got 75% more to improve. All right, so without further ado, let me jump to my own analysis. Okay. So, all right, so my wait, why am I jumping around? Did I just cancel my own da? Okay, yeah. All right, so for this week, as usual, my currency index analysis, I will follow on the indices. And just a quick summary is that I am bullish on euro and Aussie. I'm bearish on dollar and pound. So I think the interesting pair will be actually euro and pound because all along euro and pound, not say all along, euro and pound usually have a strong tendency to move together. So now I actually have a diverging view on both of them. So now, usually when I have a diverging view on currencies that move in tandem, like euro and pound, the next moment will be either I'm horribly wrong or the breakout, a really strong breakout might be coming. Yeah, so depending on what kind of trader you are, if you're a range trader, my advice is probably be a bit more conservative. If you are a trend trader, then wait for the breakout, which sometimes can be really really good run. So without further ado, let me jump into the euro. Why I am bullish on it is because if I'm looking at the euro index, look on a short-term analysis, price has just retraced to a pretty good horizontal levels. Bear in mind, I'm on a weekly chart, so I'm always analyzing on for my analysis is usually pretty useful for 4 hour and daily. That's what I would like to think so. So on the weekly chart we trace, you can see that it touched a very strong short-term horizontal level, which has been tested at least twice. So now you can see that last week it has given me a bullish bar. So I would say that price would, let me see, this is 116, at least a 400 point movement all the way to the top. And then next on my list is actually Aussie. Wait a minute, I made a mistake there, right? Euro, pound, euro. Oh wait, nah. Aussie is just no, I did not make a mistake. So Aussie is just one of those trending chart that you don't need levels to mark out. You don't need any trend line to mark out. It just has a very, very nice looking trend looking profile that goes upwards. Yeah. And the last bar that we've seen from the previous week is that it gives me a very nice test bar, a rejection bar on a weekly time frame. So that means it would just now it is I would definitely say it's not a strong trending chart. That means to me when I trade on Aussie, I don't aim for those really huge R like gold. I'll probably just be a bit more conservative, 2R, 3R, 4R, and I'll get out because it doesn't really after that it will give me a pretty strong retracement. Yeah. So if you want to see what's an example of a strong trending move, just look at gold chart on any time frame. That's a crazy strong trend. Aussie doesn't give me that, but nevertheless, still a pretty strong bullish trend. Now, the third on my list, which it isn't clear that there will be a strong trend, is actually yen. Simply because this is really to me a range trading chart, but it just so happened that it's on the low of the horizontal level. Yeah, so you can see that this level has been tested several times. Break, but always when it breaks, it will come back sooner or later, a break and retest. Yeah. So on the last week, you can see that it given me a very, very bullish close, a rejection bar followed by a bullish close on this level. Yeah. So I'm also pretty bullish on yen actually. Now, Swiss is one of those charts whereby I really have no idea where it wants to go. You can see that at this level at the top, it reach it hasn't been here any once in the past. Pretty strong rejections. Now currently it's at the same level. It hasn't successfully break through for quite a few weeks. Yeah. On saying that I don't really like to trade this in this situation. So I just leave it out. It'll be one of those type where I would say I really don't know where it wants to go. Now, Kiwi, again, if you look at the past few weeks performance, it really wants to go down. So now it's given me a low test bar, a rejection bar. So our wager guess is that the next 2 weeks it will be on a retracement move before it continues goes down. In such case, as a trend trader, I'd rather just stay out until it gives me a stronger bias. Cat is also one of those pair whereby if you look at it from last few weeks, it should be going downtrend. So similar to Kiwi, it just given me a low test bar. It seems that you might want to go on a retracement leg for the next 1 or 2 weeks before it continues on its momentum. Uh, I'll be staying out of Kiwi, Cat, and Swiss. Now DXY, now I do have a bullish view on it. So you can see that price. Now dollar is weakening since let me see, at the start of this year. And the weakening of it seems the strength of the weakening move seems to be fading off. What I guess is that price might strengthen a bit more to the $100 level and then get whacked down again. So a bit of patience is needed just to short dollar. And the last on my list is pound. Now this is a pretty good level to actually short pound from. So you can see that price actually breaks this level, come back for a retest. Again, this is the weekly chart. Right, so it has successfully retested this level, so I'll be waiting for the next coming week. Any opportunity, any price action that I see pound gives me, I will happily jump in and short. So as such, let's look at some of the pairs that I might be really trading. All right, so now a bit of a misleading marking. Yep, this looks more like it. So euro and pound, now I did mention that euro is one of the pairs that I'm looking to actually long it. So, and I would say that pound I have a is on a bearish outlook. Now, on top of that, I also did say that when I have a diverging view on pairs that usually move in tandem. Now, this is a very, very beautiful range trading scenario. Yeah, I don't personally, as a 4-hour trader, I don't like to trade within the range. I'll just wait for price to actually break out. and a break and retest, this is where I'll actually tend to trade it, right? So 1 hour traders, 15 minutes traders, there might be an opportunity for you to trade here. But for trend traders, I would really advise you to actually wait for a breakout, a break and retest. Sometimes not even necessarily a retest, a retracement of sorts after a breakout, and then we can jump in. Now, euro dollar, a very classic double bottom has been imprinted. Price has already broken the previous high. Very fast, it has already retraced back to this level. So I'm just really waiting for a reversal price action. Then I'll be happy to long it. So this is a rather straightforward setup for me. Now, Aussie dollar. Now, if you look at this part, just this two parts, and compare to euro dollar, you can see that I'm hoping that you'll print something similar. Price break and retest. That's for euro dollar. So Aussie dollar, I'm waiting for the double bottom to be confirmed. I don't know whether there's a double bottom yet. It looks like it might be the initial part of a double bottom. So I'm just waiting for it to break, retest, and then I'll be happy to put in a long position. Now, pound art. So you can see that over here, uh, this chart doesn't look like it wants to go down, right? But if you zoom in on the weekly chart on the pound art, so this is what happens on the weekly chart. So you can see that on the weekly chart, it's very clear cut that price. This is the high of it. Lower high, lower high, lower high. If I zoom in a bit more, you can see that the previous bar, it looks, and I'm not saying it is, it looks as if it's a high test bar. So on the 4 hour chart, it seems that there is a climax here already. So I'm waiting for price to actually weaken and then a break and retest. So this would really be one of those time whereby I might put in a position and go for those larger risk to reward, because this would really be the initial, the first trade of a trend change if it does really happen. All right. So this is my outlook for the week ahead for the next 1 or 2 weeks. With that, I'll hand over to Alexis.
Right, thank you, Lloyd. And let me just share my screen. Okay, I got a couple of stuff prepared for you guys, and I think again, Lloyd does mainly a very technical analysis. He's a brilliant guy on charts, and I do a bit more fundamental analysis. And if you guys have been following my fundamental Telegram channel last week, I kind of flashed. Let me just show you what I flashed. Just a recap. Okay, I flashed this on screen, which means I was looking at Euro Kiwi short last week and also Kiwi Swiss cautious long. Now, if you have been looking at fundamentals for some time, I guess you'd know that fundamentals don't change every single week, right? Because the market, the economy does take some time to fulfill its roles. So a quick recap on the Euro Kiwi Kiwi Swiss, because out of these two, there's actually one I rather prefer to trade. Now, Euro Kiwi, this is a monthly time frame. Between Euro Kiwi and Kiwi Swiss, I still am bearish on the Kiwi. I am a little bit more bullish on the euro. My position is still bullish on the euro, bearish on the kiwi. But between the euro kiwi and between the kiwi Swiss, I actually prefer the euro kiwi, mainly because of where it is positioned in the larger scheme of things, right? So, big picture, this is the monthly euro kiwi chart. You can see I still have a bit of potential for the upside. So, price has broken a key level based on the monthly time frame over here. Let me get my pen. So price has broken a key level over here on a monthly time frame, and you see there's a bit more space to go. So currencies tend to trade in extremely large ranges, right? So it does means that the probability of price hitting all these areas is there, and it's not like super impossible because price has visited these areas in the past. Now, if we look at Kiwi Swiss, which was my other pair where I was a bit cautious on the shorts, Kiwi Swiss on, I think this, you can see this is a monthly time frame at the extreme low, and let me see if I can get a better data feed for this on the Kiwi Swiss. I think let's try Kiwi Swiss from FXCM. Let's see whether it gives us a bit more historical feed. Historical feed. Okay, so this Kiwi Swiss chart all the way from 1980, right? 1980, you can see that the Kiwi Swiss is very extended, which means what is the probability of going further down is a little bit of a question mark, because historically, there's so much empty space here. Kiwi Swiss has never visited this area before. So yes, although I still kind of do like the Kiwi Swiss shop, the question is how much further will it go, and when is the point where somebody will say, hey, this is too cheap, let's just turn it around. So if I had to choose, I'll still prefer the Euro Kiwi, of course. Now, another thing I want to look at is, gold price is at all-time high, right? But before I look at gold price, I want to kind of explore a little bit about the VIX index today. Now, the VIX index, the volatility index, please go Google it a little bit to kind of understand it after this session. It will be a little bit more helpful to what is happening in the market currently. We are heading towards a high volatility market. Now, as a summary, if the VIX, the volatility index is above 30, it means there's a lot of so-called fear index. There's a lot of fear in the market. If it's between 20 to 30, the market is deemed a little bit more normal. So that's how a lot of people sense the market this way. And what is interesting is this is a daily time frame. You can see that the volatility index has spiked and almost hit the 30 level, right? So not quite hitting the 30 yet, but almost there. Now, traditionally, historically, every time the volatility index breaks above the 30, there is a sell-off in the stock market, because there's a lot of what they call fear in the market. And this is largely because the volatility index is calculated using a certain way, using options, the options market. I won't go through the calculation, it's too complicated. I also don't quite understand it, in fact. But because the option market has a lot of relation to the way the stocks move, right? So if volatility is high, there tends to be a higher probability of a sell-off in the S&P, the stock market. And of course, if there's a sell-off in the S&P and the stock market, this will eventually affect the USD itself, the US dollar. So this is why, as currency traders, we also want to kind of see what is the other markets doing out there, because we want to know whether the demand for US dollars is still there or not. So what is interesting is that the VIX has approached the $30 mark, the 30 mark, in October. You can see the spike over here. And this is just to show you guys the green boxes, that every time the volatility approaches the 30 or is near 30, there is some kind of sell-off. So this one didn't quite break above 30, this level over here, but we had a little bit of a dip, a little bit of sell-off, bigger spike, bigger sell-off. Again here, big spike, not so big sell-off. Now, this is just a probability. It's a probability game, right? So the question now is, in the next few weeks, as Trump continues, there's a couple of things happening in the US. Government shutdown, haven't opened yet, right? Trump is laying off people left and right. Trump is hitting China with tariffs, but then again, he reversed his tariff, his tariff quotes. He say, or maybe he won't tax 100%. We don't really know quite what he's doing. But I think his aim is just to influence in some way or form, influence some kind of US dollar position. Where the position is, I have absolutely no idea. US dollar is not my favorite currency pair, because it is very, very unpredictable. It goes up and down based on whatever the market's doing, whatever Trump is doing. But if you have to ask me what position would I rather take the US dollar at this point, it's a bit more to the upside. Very simply is, you want to buy stocks, you have to buy USD. You want to buy gold, you also have to buy USD. So the demand for US dollar is there, right? And when we trade the USD, I always like to look at the US dollar 10-year yields, right? So if we look at the US dollar 10-year yields, which means the bond market, yes, although US bonds are not the best currently, but if you look at US dollar bonds, right, in the recent, let me go back to the daily time frame. So in the recent months, weeks, it has been going down. So, and if you track the dollar yen together with the US dollar 10-year yields, you will also notice a slight softening of the US dollar towards the last couple of months as everything softens together. But then there seems to be a little bit more resistance here. For the first time in the entire week, the 4% yield has been holding. And it seems like the dollar has an opportunity to figure out whether it wants to go up or not. Now, this is good for all our dollar traders. Things like dollar yen, dollar sing. These are two currency pairs that I really want to look closely next week. And particularly because of what's also been happening on the Japanese side. So the Japan side is going to have a vote next week. They might have a new prime minister. She might be female. But basically, when she got into position, right, last week, the Japanese yen actually went down, right? It got very weak because of her stance of very of her stance of not wanting to actually she actually doesn't want to increase interest rates, and that is why the market reacted that way, that if she got into power, then the new Japanese premier, I think, or potential prime minister. So I think this new elected Takaichi, I think she is going to have a potential election next week. Maybe she'll go into premiership. We don't know, but her position is really not a position of wanting to increase interest rates, and that is why the Japanese yen is kind of taking a hit at this point. So if you look like dollar yen, and this is like a combination of factors. Over there, you have the US shutdown, tariff situation, gold at an all-time high, S&P at an almost all-time high. We have the volatility index rising. On the other end of the world, you have this political situation happening on a Japanese dollar side, right? So that means, right, the Japanese yen has potential to go up. The dollar yen has potential to shoot up a little bit more. So what I'm looking for is the dollar yen already gave us a break and retest position. Nice little pin bar appearing on Friday. I want to see whether this level holds, and we can see whether price can revisit the 160 level in this very two volatile weeks, in the next 2 weeks. All right. So this is something interesting to me. But on the other hand, remember the VIX. All right. If the VIX does break above this level, I think market structure will change. But if the VIX doesn't break above this level, I think there's still a high probability prices are just going to zoom. Gold is still going to go up. S&P is still going to go up, and if prices does break above, the VIX does break above 30, I think gold might even go up higher because the S&P, the indexes will all dump on its way down because the fear index is so high. So these are a couple of points to note, that because if it's more of like a if this happens, if A happens, B might happen. So these are all the different probabilities that might be happening in the market. It all starts with potential of what the VIX market is doing. Okay, so if VIX goes up, we'll see S&P starting to the FOMO coming in, and people are starting to throw their stocks down, and then people will flood into gold because gold is a safe haven assets, prices are all-time high. But notwithstanding, you also see that big up and down volatility gap, right? Which means gold is going to go up and down really, really aggressively as well. Right now, how do you trade gold? You might ask. You guys, everybody has attended your daily wave rider. Imagine if you pair your daily wave rider with any kind of trend trading strategy, gold is clearly trending towards the upside. Just looking at the weekly pivot, week over week over week, there's not a single week for the last 1, 2, 3, 4, 5, 6, 7 weeks. Gold has been trending up non-stop for the last 7 weeks. My only question right now is, will it come into a big retracement before continue going up? Or will it shoot even higher, like Lloyd says, and then there's a chance of hitting a 4,500 next week? We don't know. The best way is use your technicals, use your strategy. However, your personality, how you get that 1:20, your 1:10, 1:5, whatever, is just to figure out systematically how to take advantage of following the market when the market moves. So if you're a trend trader, find those entries, take those trends, and don't try to guess what the market is doing. We prefer, as retail gold traders, I would prefer to follow where the money is. And if the money on price action says long, I'm just going to go long. The trend is still long. Everybody is buying. There's no reason to sell gold. Why are we shorting gold? So don't try to say gold is too high. Let's U-turn it. There's no reason to sell gold at this time, right? Because when the VIX goes high, when the stock market crashes, if it does ever crash, gold is not going to come down, right? So, but then again, don't forget, if people want to take profit, so you also probably need to figure out when to do those as well. Okay, so currency pairs I'm looking at as a fundamental trader, very simple. I am still sticking. I'm adding dollar yen. I'm still looking for Euro Kiwi, okay, because fundamentally the Kiwi is so soft right now. Unfortunately, because the Kiwi has been weak for so long, we are probably in its like third or fourth leg of weakness. I do want to see a bit of retracement before further taking it towards the upside. So this is my Euro Kiwi chart. All right, finally broke above a level last week. I do want to see whether this level holds, and then we slowly going to follow the trend towards the upside for Euro Kiwi, because the Kiwi market has continued to be very soft based on the data. So Euro Kiwi is something I'm looking at. Dollar yen, something I'm looking at. And also lastly, let's take a look at my beloved dollar sing. Okay, slow, but dollar sing is a currency pair. Very nice and easy to trade, especially when it starts moving, because it pays positive swaps, especially if you're using JDR securities. All right. So it's already started. Dollar sing, very slow, steady moves of cyclicity. Got your higher low. Price is finally hovering above the 1.29. I do feel that if this trajectory continues, price can eventually break above the 130. It will slowly meander towards 131, maybe 131.5. I don't know about 133. All right, because the Singapore economy is doing pretty okay for now. Still a little bit stable, but this move is more on the back of a stronger dollar more than a weaker Sing. The Sing dollar is pretty strong. All right, so I feel that we do have a good probability of hitting at least the 1.31 in the near term if the dollar continues to hold its run like this. All right, and that's all for me this week. Let's see if Lloyd has anything more to add for where we're going next.
No, I got nothing more to add. I just kind of like it when you say just don't predict the movement and say that gold is too high. Unless you are hearing from someone with a $6 trillion wealth, then yeah, if someone with $6 trillion is going to short gold, yeah, listen to him. Other than that, why
Mm.
bother?
Yeah, I mean, why bother? Because who is going to want to sell gold right now, right? It's on a buy for so it's just crazy buying. And every time gold prices come down, I think the price action is very clear. Every time gold prices come down, all these people are just picking up the slightly cheaper price of what they've missed over here. So it's a lot more profit taking. I think these red bars are more profit taking than selling, than the actual selling. Yeah,
Yeah.
it's probably traders taking all the profits coming out because you look at the market structure. The market structure there's no market structure here that says gold is soft. It's super, super, super bullish.
All right, so with that, my last pray for the week is that please continue to go momentum so it can pay for my 4 holidays for next year. Currently, it is on track to pay for the third one. Okay, thank you guys, and we'll see you in the weeks to come. Hopefully, you have a good